Welcome back to Your Average Investor. Today I bought 300 shares of Gamestop and I'm going to tell you why. First off, if you haven't already, please subscribe to the channel, help support us so we can monetize this thing and do some more fun giveaways. Now back to GameStop. If you haven't caught up on the news, go watch some of our latest videos. We talk all about it there. What happened most recently is Roaring Kitty posted again to Twitter, not to Twitter, to X, and to Reddit, that he has a new position worth about $200 million of GameStop shares and options contracts. On that news, GameStop popped to about $27 per share in overnight trading, rose all the way to 45 in pre-market this morning. We're going to zoom out here so you can see 47 rather, sold off for the rest of the day, down to about 29.3 is where it's sitting at right now. So, why did I decide to buy in heavy today? Well, Roaring Kitty has a post. He's got a massive position of GameStop shares with an average of about $23 a share. And on top of that, he's got a massive amount of contracts that he bought that are for the call 20s. I believe it was the call 20. In fact, let me see if I can... let me just validate that real quick. Yep, call 20s. So he's got a massive number, 120,000 call 20s that expire in 3 weeks. In fact, we can probably find them here on the option chain. Let's just pull this to like 40. And there they are right there. 145,000 in open interest. 120,000 of that is Roaring Kitty. His cost basis on that is about $500 a pop. And you can see at market close today, they were worth double that. They were worth $1,000 a pop. Now, here's where it got interesting. He actually posted tonight after market close that he was still holding his entire position. He didn't sell anything today. You can see the volume on this actually wasn't even that big, 10,000 compared to the open interest. So, you know, there was some speculation this was Roaring Kitty taking some off the table. Actually, he held his entire position and is now up pretty significantly on it. I mean, he's doubled his cost basis here, or excuse me, the price based on his cost basis. So, why am I buying? What am I doing right now? Roaring Kitty is going to be keeping this above 25 bucks a share for the next 3 weeks, just based on the volume that he's in on. That's going to become the new floor. This is my opinion. It's not advice. Don't take it as such, but my opinion, 25 is the new floor for GameStop. So I made 3 big purchases of GameStop, 3 lots of 100 shares. I'll show you those right now. You can see here, I bought first today at 35.8, and then again at 33.39, and then again at 34.47. Each time I immediately turned around and sold a covered call for about $700. You can see I bought this one, sold the call 36, bought this, sold the call 35, and then bought this and sold the call 34.5. So I collected just under $2,200 in premium. 700 plus 745 plus 735, $2,180 in premium. Now, if all of this gets exercised, I'm happy with that. I spent about $10,000. I'll make a nice $2,100 profit plus a little bit extra in appreciation here. You can see this contract here, if it expires in the money, I'll make about $20. This contract here, if it expires in the money, I'll make about $160. And then this contract, if it expires in the money, I'll actually lose $3. So about $200 there on top of this. I'll make a nice profit of almost $2,400. Now to the downside potential, here's the other reason I sold these covered calls, is my average is right here at this green line, about 34.5. It's a little bit under that, I think, but about $34.50 per share, or maybe it's a little above. This green line represents my break-even point with the covered calls that I sold. I sold 3 covered calls for about $700 a piece, brings my average down here. So if GameStop on Friday is trading at $27.35 per share, I'm break-even on the stock. Now remember, these contracts that I sold, they literally expire in 4 days, 3 days now. So we've got Tuesday, Wednesday, Thursday, well, 4 days, or yeah, 4 days or so. So if these expire worthless, what I'm going to do is I'm going to just roll them out to the next week and sell again. But the great thing is because my cost basis is now $27 per share, I could sell the call 30s, I could sell call 28s, I could even sell call 27s and still be profitable on the trade if the 27s get exercised. But what ends up happening is each time I do this, I bring my cost basis down. So my cost basis today was 34.5 minus about 7.015 or so, and that brings me down to 27.35. Let's say that these expire out of the money and the price of GameStop just hovers around 30 bucks per share, right? I'm down $1,200 in from my average to where the price is, but because I sold $2,200 worth of covered calls, I'm up about a G, and then I can just sell another covered call. Let's say I make an average of $600 per contract for that one. Then I bring my cost basis all the way down to 21.35 per share of GameStop. And if the same thing happens for one more week and I can get one more, and I'm making it less each week because likely the implied volatility will go down each week, which means I'll have less premium to get. But let's say I do it again for about $400. Well, within 3 weeks, I've brought my cost basis down to $17.35 per share of GameStop. And assume that I could get $300 per week for the next few weeks. That would be 1, 2, 3, 4, 5, 6 weeks until my shares of GameStop are completely free. Now, of course, it's not very likely that this happens, right? Probably what happens is at some point I'm going to get exercised and I'll just take my gains and move on. But theoretically, that could happen, and that's what I'm doing to protect my downside. So come Friday, I'll be selling again. I'll be moving this line down to hopefully somewhere in this $23 to $22 range, $24 to $22 range. And then the next week after that, if I haven't been exercised, I'll do the same thing one more time. So the reason I'm doing this is I feel it's a fairly safe trade. I put up about $10,000 and I'm going to make about $2,500, right? It's $2,500 divided by 10,000, easy math. I make a 25% gain. If by chance this rallies back over my call position, my highest covered call I think was a 36, right? Let's see. Yep, call 36. So my highest covered call was a 36. I'll just add a new price line here to keep track of that. That's where I would be exercised out of all of my GameStop positions. And I'm going to switch this to green as well to keep track of that. So at that point, I make my 25% in 3 days and I move on. And that's a phenomenal trade to have 25% in 3 days. But if it doesn't exercise again, I just keep selling covered calls, collecting premium, and waiting till I do get exercised, continuing to reduce my risk in the trade over time. And honestly, this is how I would trade GameStop again right now if I wasn't already in the position. I would be buying about 300 shares. Well, again, this is not financial advice. I buy shares in lots of 100 with whatever is appropriate for my account size. And then I would immediately go around and sell covered calls on those, right? So like if I did that right at market close today, you'd have bought these, let's see, what was it, like right before market close. Say you got in right at 28 bucks. Then you turned around and sold the call 29. They're in the money now, but they weren't before. So you get in at 28 bucks, you sell these, you could probably split the difference there, get it for 450. So you're in at 28 minus 4.5, and now you've just reduced your cost basis to 23.5, which coincidentally, Roaring Kitty's cost basis right now is 23.14. So you'd be just above Roaring Kitty's cost basis and in a pretty dang safe place. And then again, 3 days later, 4 days later, once those calls expire worthless, well, if they get exercised, you just made great money, right? Because you spent $2,800 and you made 450. So 450 divided by 2,800, you made 16% in 4 days. And if you don't get exercised, you just continue to sell contracts, always above what I call the true cost basis. The true cost basis is just what did you buy in minus how much premium you've received. So I bought in at 34.5 and I received about 7.15 in premium. So my true cost basis right now is 27.35. What that means is next week when I sell more calls on GameStop, assuming these expire out of the money, then I will not sell anything that doesn't net me a total gain on the trade, right? So let's say GameStop drops down to $27 per share. I'm safe to sell calls at 28, 29, 30 because my true cost right now is 27.35. And so what will end up being my end gain is just whatever I make on the premium, right? So like let's just say GameStop drops exactly to 27.35, and I sell these call 27.5s next week, right? So like a week out. Oh, they don't have the 27.5s, but say I do the call 27s, and I get, there's not quite as much premium there. I get $400 in premium. Well, all I'm gonna do is say that's gonna drop my cost by 4, right? 23.35, and then my strike now is 27. So my maximum profit on that is going to be 27 minus 23.35 times the number of shares that I hold. And at that point, I've limited my upside pretty significantly because I've sold significantly below my original buy-in. But again, I'm still, if I get exercised, I'm still profitable, and I've given myself more downside protection. So that's how I'm playing GameStop. That's why I decided to buy in today at 300 shares. I wanted to participate in this GameStop rally, but I wanted to protect myself against exactly what we saw today, a relatively significant sell-off in the market. And I expect that nobody really knows what's going to happen, myself included. So we could see this roar back to $50 a share, and I'll be capped out at mine $36 a share. Or we could see this continue to pitter around here. I would be surprised again if this dropped back down to this range. I'd be quite surprised. I think $25 is going to be the area that gets defended pretty dang hard by anyone who's looking to go long GameStop right now. Before, we had a pretty strong support at $20. I think the support now maybe is at $25 per share. That was acting as resistance before. And you can see, even if you just come in here, right, the sell-off today matched almost the peak of this couple days ago here. So looking pretty good overall. Curious to hear how you guys are playing GameStop, or if you're just sitting around on the sidelines. Would love to know. Thanks for watching. Catch you next time.